Hey, it's Joel Olson coming at you with another variable rate update. So we just want to keep you posted where things are at. First of all, we're going to review three things that I think are really important to know that we haven't spoken about in length before. So first thing, rates have not changed this week. The next meeting is the first week of June. That will be the next time that they meet to change the variable rates. Fixed rates have moved up a little bit more this week, quite meaningfully. You're getting closer to the mid fours on 5-year fixed rates. So fixed rates continue to move upwards. And variable rates, obviously prime sits at 3.2. And so if you have a variable prime minus 1, you're sitting at 2.2%. Are we recommending, we get this every day, now are you recommending locking in? No, we're not recommending locking in. And I don't know that we're ever going to get to that point, but I never rule it out, but I don't ever get to that point. So first thing I want to review right now that's really important, I've got a lot of inquiries that people send me articles. And so a big thing I want people to realize is that the Bank of Canada is not setting the prime rate, they're setting the overnight rate. The overnight rate influences the prime rate. So right now the overnight rate is 1%. So particularly there's a Scotiabank article that goes around the highest prediction of where the overnight rate could end, which I don't believe necessarily is going to be the case, but the highest prediction you'll see as of right now, where they want the overnight rate to end up in the next couple of years is 3%. So right now we're at 1%. So if you had a prime rate of that would put your prime rate right now at that would make the prime rate rather at 5.2 if and when that happens. So if I had a variable, I'd be down to if I had prime minus 1, I'd be 4.2. So if that happens, that would still put you lower than what the fixed rates are today. So keep that in mind as well. I think I've done a lot of videos that I think that we're getting closer to a real feeling that, move rates up for the period of 12 to 18 months to lower them back down. That's becoming more and more likely, a 40% chance of recession by almost all major banks and investment banks throughout North America. Secondly, so I just wanted to make sure you are always aware, overnight rate, prime rate, not the same thing. Number two, what I want to talk about is, I get it, people are becoming more frightened, especially this last rate increase. Next rate increase, we're seeing articles saying it's going to be at 0.5%, which, that they could even move it up 0.75%. I would say that would be unusual, but you see lots of comments saying it warrants moving up. Now, warranting moving it up is a lot different than them being able to do it. The problem here is that the Bank of Canada waited too long to raise rates, and so could they move up 0.75%, which would never have happened before. If that happens, we're looking at you have a prime of 3.2 right now, 2.2. That means you could come into the situation where you're sitting at a rate of 2.95. If that happened, I would say if that happens, that's the end. That's the last rate change they could have. All articles are pointing to the idea that they wouldn't have more rate changes, but they would just be bigger sooner. So I don't know that we're getting to a different place on that. We're still talking about rates being below 3% for the time being on a variable rate. And so for the people that get worried, say, well, at one point we could got fixed rates in the high ones. This is, first of all, we cannot underestimate the idea here that if you pay out that mortgage early, that all bets are off. It'd still be way more expensive taking a fixed rate over a variable rate. Secondly, we're not in a situation where the fixed rates would tend to hold for a sustainable amount of time. And we're not in a situation where we think that the prime rate, and more so the prime rate discount, we could start seeing lenders going prime minus 120 or anything like that. These are all distinct possibilities and likely in the coming years. So we guarantee all of our variable rates for the idea that you can see a bump on an interest rate and a drop back down, which is inevitably what people are talking about as we go into recession from that perspective. I wanted to, though, really talk about the idea is I understand that rates are scary for some people. When you see your payment moving up, it does give you a cause for unrest. And, it'd be easier to tell you to lock in and forget about it. But here's another strategy that we think we ought to be talking a lot more with clients about. If we assume that we qualified you at a 5.2 interest rate, would it not make sense for you to reach out to us and to set your payment at as if you were paying 4.2, as if you were paying 5%? You set your payment up. That means the difference in your payment goes towards principal. It's giving you margin. You're creating more equity on that. And also, you no longer have a concern on rising rates because you've already increased your payment. And at the very least, running that calculation means that you know how much payment can increase. But if we can, let's set that payment up a little bit higher. Let's set that payment up as if they're 4 or 5%, and just let's see your actual principal just completely get eaten away very quickly and putting you in a high equity position. So if you want to do that, that would make the most sense. This is something we did years ago, and I don't think we talked about this enough, but like, let's look at what, instead of locking in, let's look at what the 5-year fixed rate is, keep you on variable, and set your payment at the 5-year fixed rate, and have the rest go towards principal. Then if something happens and we get into a situation where you're, that payment isn't sustainable or whatever it is, you've built up all these payments you're even allowed to skip. So lots of reasons to do that. If you want to do that, reach out to us. That'd be our best variable rate suggestion for this week. Again, we're still recommending to stay variable, stay the course. I know I know it can be frightening out there, but there is still unbelievable data. I saw a survey by financial professionals, and they asked financial professionals, 450 financial professionals, if they would go variable and fixed. In other words, 450 of them would go variable and 0% would go fixed. I have all my mortgages, which are several of them, on variable, and so I'm in the same boat as everyone else. So if you need any help, or if we can help with anything, please do reach out. I'd love to chat with you if you haven't had a chance to go through your personal circumstances. Again, share this video wherever you can. Love if you could subscribe to our channel if you can too. And we have some other videos there where I'm taking apart some news articles and things like that, and some other mortgage myths to be aware of that could be very helpful. Thanks so much. Have a great day.